It's about that time of day again. My name is Joseph. Tuesday evening, November 13th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, oil is bearish with a strong run lower today. And that tells me to expect a range tomorrow morning. And I'm looking for selling opportunities, and I'm waiting for buyer failures up above the range tomorrow. The S&P is bearish as well, but we're trading at the lows of a wide range on the Emini tonight. That wide range is a big clue because it tells me to stay patient for selling opportunities, but I have to wait for that, what I call that nested two-try failure pattern on the S&P tomorrow. Make sure you tune in for that S&P chart. Get a great learning opportunity on the S&P tonight. Nasdaq is also bearish with a trading range of its own, not as tough as the S&P's range, much easier on the Nasdaq, and with price trading at the lows of its range in the NQ, I'm going to wait to sell off those highs using those two-try failures. Gold is bearish, the trading range as well, and I've got 3 levels of resistance all coming together with confluence for a key selling area overhead for tomorrow morning, and the euro is bearish with a flag pattern. But sellers appear to be what I call boxed in without any good option to sell right now. So that tells me when there's nobody looking to sell, well, I should probably be looking to buy, and I've got some specific locations where I'm expecting sellers to get into trouble and where we might find some buried treasure on the euro for a short covering rally tomorrow morning. Boy, we're back after a Veterans Day holiday. A big happy Veterans Day to all you vets out there. Hope you guys had a great weekend out there. We're back in the action, though. We got a big week ahead of us. We got news regarding the Brexit talks. We got big inflation news tomorrow. It's going to be a crazy day in our trade room, and I want to make sure that we have a plan put together. I'm going to crack these charts open in just a couple seconds, though. Before we jump into charts and put the plan together for tomorrow morning's trading session, I want to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire trading strategy. It's written out in text right here on my blog at Sideways Markets. I'll leave all the links in the description of this video tonight. Also, if you have any questions about anything covered in this video, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing. And when you do, hit that bell icon so you get notified every time I post another video. And don't forget, if your goal is to become a consistently profitable trader, make sure you join our mailing list so you never miss another video. You can give me your name and your email address, and I'll send you an email every time we post something new. Don't forget, all the charts from tonight's video are available for you to download. We'll be using these charts tomorrow morning in our trade room, but if you're not going to be with me tomorrow in the trade room, next best thing is to grab those charts. There's a big button right below the video tonight on our blog to download all those charts. And don't forget, if you have any questions, any trouble, anything at all, right, I'm always available for you guys. You can pick up the phone and call that toll-free number in the upper right-hand corner, or use that live support tool right in the upper right-hand corner as well. Once again, hope you guys have a great weekend out there, but it's time to roll those sleeves up. We got some work to do here, guys and gals. Let's start first by checking out the calendar here for tomorrow. The global calendar is filled with Red Star news events tomorrow. Tomorrow's Wednesday, November the 14th. First of all, we've got tomorrow big news here coming out of the EU. Apparently, we'll see how much this actually gains ground tomorrow. But apparently, we do have some sort of Brexit agreement, some treaty that apparently is being renegotiated. They're calling everybody to Brussels tomorrow to try to get everybody together, all the member states, and so I have a funny feeling that that's going to probably impact the gold and probably the euro. I would imagine any other EU currency is probably going to be a little bit on the lookout tomorrow. We may see some weird price action. We may also see some really strong trends tomorrow because of that pending announcement. So I'm going to be keeping my eyes open tomorrow. We'll keep our ears and eyes open, see how that develops. It doesn't sound like they're too optimistic about it, but who knows, man? Who knows? The perception is really all that matters. They could be a mile away from getting any deal done, and we may still get some really great movement tomorrow out of those currencies and that gold. So that's definitely something on the on the front burner right now. We're watching that as we go into tomorrow's session, and as you can see, it's just a peppering of news tomorrow in the EU. We got GDP flash, right? We got CPI galore, right? Inflation all over the place tomorrow between 2 o'clock and 4 o'clock, and of course, anytime you're talking inflation, you're thinking dollar. You're thinking currencies, you're thinking gold. So again, toss some more gasoline on the fire. We got the Brexit talks. We've also got some CPI, right, some inflation numbers coming out early tomorrow as well. So I would imagine the London session, that 3 a.m. to 6 a.m. time frame for gold and currencies is going to be, right, a pretty active session tomorrow morning. So get there early. Then, of course, we got the GDP flash, industrial production from the EU tomorrow at 5 a.m. And that kind of caps off what should be a London session that is filled with fireworks. This makes me wish I lived on the East Coast here of the U.S. because it's almost impossible to get access to this. It's just too late or too early. It's right in the middle of the night here for me in Los Angeles. It's too bad. I focus my energy on the U.S. session. And, of course, my strategy works all the way from the beginning in London at 3 a.m. all the way to the end of the U.S. session, right, at basically 4:30, 5 o'clock, right, the following day. My focus is the U.S. session. My trade room runs in the U.S. session every day. And tomorrow morning, 8:30 Eastern time, there's no rest for inflation. We got the consumer prices coming out at 8:30 Eastern time as well. So again, when I think about inflation, I think about currencies, I think about metals, right? Gold definitely going to be on our radar tomorrow. So lots of inflation numbers tomorrow. And then, of course, tomorrow night, I don't expect that labor force survey to have too big of an impact, but I definitely do expect tomorrow night we get some big news coming out of China. Retail sales will definitely be huge because we're seeing a big pullback in their overall economic growth right now between auto sales and home sales. So I'm sure everybody's going to be watching that news number tomorrow night. We'll talk more about that tomorrow night on tomorrow night's newsletter. But for right now, though, boy, I'll tell you, if you're in Europe or on the East Coast of the U.S., if you can trade that time zone in the London session overnight, there should be some great opportunities for you guys tomorrow morning in the London session. And of course, tomorrow morning we'll be opening up our trade room at 8 o'clock Eastern time, and we'll have a front row seat. One of the nice things about the U.S. session, one of the reasons why I love it, is because we get the benefit of being able to see what happened overnight in London, and then of course we can put together our plan to capitalize on people getting trapped, right, in different scenarios we see every day in our trade room. One thing I don't see tomorrow, if you look closely here, and there's a lot on the chart here right now, one thing I don't see tomorrow is that weekly inventory report, right? Usually on Wednesdays we hear from the EIA that weekly inventory report has been moved to Thursday, and this is pretty consistent. Anytime Monday is a holiday, Monday was Veterans Day here in the U.S. here yesterday, right? So anytime Monday is a holiday, that weekly inventory report gets pushed back about 24 hours till about 11 o'clock on Thursday. So that won't be affecting us tomorrow. We got pretty much a full day ahead of us tomorrow, with the exception of that. We'll see what happens with the Brexiteers tomorrow. We'll see how that goes tomorrow. Other than that, though, it should be a pretty exciting day tomorrow. I'm looking forward to seeing you guys tomorrow morning, 8 o'clock Eastern time in our trade room. Now, speaking of our trade room, let's put the plan together here for tomorrow's session. Let's see. We got crude oil, S&P, Nasdaq, gold, and of course we'll wrap up tonight on that mighty euro. Crude is bearish with a strong move lower into a measured move and a bear channel. Boy, crude just keeps going lower. In fact, all the way back to almost exactly where we were this time last year, right around that $55 a barrel. It's amazing how much we went up. Just a month ago, you had talking heads on CNBC talking about $100 a barrel. It just goes to show you how quickly things can turn, especially right when you're on television, right? So the chart is what you can trust right now. I wouldn't trust anybody trying to predict bottoms on this thing. This thing just keeps on going lower. The fact that we're back to last November, literally last November's low, does seem to be symbolic. Maybe we see a bottom here tomorrow. The bears have momentum, so I'm definitely looking to sell at resistance levels overhead, which means I've got the eyes on the high high of this channel. You've got this bear channel coming down, right? I'd love to find my sells off the high of this channel, or even better, I mean, wouldn't it be nice if we get a deep pullback back up to that reversal line up at 56.85? We got a bunch of key levels of resistance that I'd like to use tomorrow, but let's be honest, anytime we see a strong run in one direction, I mean, look at the math on this. That's the high of 35, right? The low of, we'll say 50, almost $5 if my math is correct on this, right? Almost $5, about $4.50 down. That's a big move for oil in today's markets. A couple of years ago, I wouldn't have said it was that big of a move, right? $7-8, that's more of a big move a couple of years ago. But with these kind of range-bound markets we've seen so far in 2018 on oil, at least, this is one hell of a move. And so anytime we see this much movement in one day, what happens? Usually the following day is going to go sideways. We saw good examples on this last week on the E-minis. We saw those big moves on the E-minis leading into range-bound days the following days. So yes, I would love to see a nice deep pullback off this low, get up into the high of this channel. I'd love to see us go up right into that battle zone tomorrow. That will be great, but I've got to keep my eyes open here on a possible trading range. And if we do see a range, really the goal at that point is to get buyers trapped and use that one try, that two try failure pattern. And we'll just keep looking for that tomorrow. Most likely that's what's going to happen. So let's dig in here, jump into this chart a little bit closer here. I've got really two, let's say three key levels of resistance right now. One is that reversal line at 85. Two is that very, very short-term swing at 86, $1 lower. And then the third is this trend line, right, coming down. Those are three levels of resistance that we're watching right now. And you can see here you've got the 86 level lined up right with that area. So that area really becomes a magnet for us. And we definitely are looking for some opportunity to sell off the high of that range. Like I said earlier, I hope we get something bigger. I hope we go a little bit, right, more of a deeper pullback. I love to get up around this 85 area, right, get that one try, two try, and back down from there. So those are my two areas I'm watching for. I really want to be ready for everything right now. Let's plan up, let's plan down, let's plan sideways, and we'll also plan what it looks like if this market is going to reverse. So as we get closer here on the chart, if we can get up around that first kind of area of resistance, we'll be above the moving average. With price being above the moving average, we can expect we're going to see buyers try to buy the pullback. Those buyers will likely try to buy the pullback for whatever reason, calling a bottom, using a too fast of a time frame, right? Not seeing the big picture. But I'm sure there are going to be a couple, I'm sure there are going to be quite a few buyers here who are going to think this market's gone too far. They're going to see some random support, like a measured move here, and they're going to think it's time to buy this market. And I hope they do, because that's going to set things up here for a sell going right back down to retest that low. Kind of a variation of what we call the two-try failure pattern. We go up once, we pull back, try again. That tells me now where the stops are, right? That basically gives me a bullseye now to sell into. Buyers get stopped out. They have to become sellers. It's the only way to get out of a long position, and the market will collapse back down again. Now, another pattern I'm watching for will be what we call a two-legged pullback pattern, which where we bounce off a trend line, and we can use that trend line, right, as a resistance level as well. You'll notice how I can draw that trend line off these lows. We don't try to sell the break of the trend line, because that's usually a fool's game. Try to sell the underbelly, right, of that trend line. That's usually where we're going to find, right, the best level of resistance for that sell. So a couple of ways I want to do this is be one try, two try, right? Let those buyers here try to buy off that pullback, and then look to sell right into their failure. And if we can get lucky on this, one try, pullback, two try, right? Get those buyers to fail. If we can get lucky on it, we can find that hidden channel pullback pattern, draw off those lows, draw off that high. Bingo, that creates my range into my channel right? And now we can sell. We can sell the 1-2 try, that 2 try failure. We can also sell that hidden channel pullback pattern as well. Those are 2 easy patterns, and 3 patterns if you want to include, right, that 2-legged pullback pattern. Again, watch for a trend line and then get below it and use that trend line as resistance for that sell going back down. So a couple patterns there I'm looking for as we get back up to the high of that channel. Now, what if we go sideways here tomorrow? What if we go sideways here? Let's play that game now, right? What if we end up going sideways? What if we just sit here and kind of go range bound, right? This may not be drawn perfectly for it, but what if we start seeing double bottoms here, or maybe it's a triangle here tomorrow, but the market's going sideways on the chart. The market moves sideways, it's a bear bias, so I'm still want to sell. I just got to wait for those buyers to try and fail, right? What will happen is if we start going sideways here, you'll start seeing buyers. They'll try to break this thing out. Well, that strong attempted breakout will get those buyers trying to buy the pullback. And once they do, this gives me 1 try, 2 try, and I can now sell right back down to that range again by using the 1 try, 2 try, that 2 try failure pattern, right, as we go back higher. So that's what I'm watching for if we have a range here tomorrow. Now, could the market keep going lower? It could keep going lower, obviously, right, and keep doing whatever it wants here. What if we keep going lower here? Then what do we do? Well, at that point, right, it's pretty much just wait for traps. It's wait for failures. I'm going to mark up those prior swings. If we just keep rolling lower, right, it'll look like something like this, right, where it's kind of rolling lower like that. If we just roll lower here, just keep rolling lower like that, not to worry, don't chase after it, wait, you will get that pop, right, and that pop, I start looking for what we call bull traps, right, bull traps up here. We look for those trap patterns because we don't want to sell low. We want to sell high. As we go lower here, we'll start focusing on traps, sell high up at levels of resistance. Last but not least, how do we turn bullish? What would a bull market look like here tomorrow? Starts off with a strong move up, pulls back to the moving average. No, we don't buy this pullback because this pullback is more likely to fail and we're likely to drop right back down to that low again. So instead of trying to buy this here, I wait for that explosive move going higher. I call this the 1, 2, 3 reversal. And again, I always kind of joke around with you guys, right, by saying there's an exclamation at the end of that, right, because there has to be some exclamation as we go higher. So 1 is that strong counter trend move, 2 is a pullback to the moving average, and 3 is that strong jump off the moving average, because what that does is that signals now that those buyers have taken control. It's the bears that have lost control, giving that now right to those buyers. If that's the case, now what do? Do we chase after this up here? No, we don't. We draw in a new channel off the highs, high to high, back down to that low. Then I mark up that prior swing, and that creates my buy zone right in there, right? I want to buy the low of that channel, and we'll use 2 try failures, bear traps, 2-legged pullbacks, all kinds of different entry patterns that we can use on the low of that channel. Now, speaking of entry patterns, I've talked about all of the actual patterns, but I don't have enough time to go over all of them with you on this video. One of the most common questions I get is this is a pretty slow time frame. This is a 3,000 tick chart. Do I use a faster time frame? I do. I use a third fractal. I'm closer to a 1,000 tick chart every morning in my trade room. And I'd love to show you more about how we trade every day in our trade room, all the entry patterns we use, the entry time frames we use, and this gives me the big picture, but I want to show you how we actually use this every day in our trade room. And to do that, I'm going to give you guys a free trading course. You'll see a little pop-up here across the screen here right now. Grab that free course. If you're on the blog, there's also a big red button right below this video right now. Grab that button, follow me over to my website at schooloftrade.com, and I'll give you a free access behind the curtain into the members section where you can learn how we use this strategy every day in our trade room. That way you know exactly what what it's like and what to expect when you come out and join me and trade with me every morning in the trade room. So grab that free course in the upper right-hand corner here on YouTube. It's also linked up below the video on our blog, and it's also linked up in the description of the video as well. All right, let's keep going. How about some S&P right now? The S&P is bearish with a trading range on the chart this evening. The bears definitely have the momentum. You can see if you look left here, right, that move lower here yesterday in the holiday, and then of course into today's session, right, Tuesday's session going sideways. So it's a bear bias into a trading range. The bears have the wind at their back. They've got the momentum, and that tells me to look for selling opportunities. Now, because we have a range, I want to focus on selling up around the high of that range. The challenge is the width of the range right now. Anytime I see a really wide range, and you'll see an example of the differences between the S&P and the Nasdaq, this is a real wide range. In fact, you'll notice if you put a midline right in the middle of that range, you can always tell when a range is really wide because it kind of gets broken in half. And you can almost kind of use it as a separate, right, range high and range low, right? They're almost two separate ranges. They're one big range, but they're just so wide that traders will break them up and use smaller instances of it just to make it easier for them to trade. Bottom line is, anytime I see a wide range, I need to stay patient because of momentum. For example, I want to sell the high of this trading range, right? So as I jump in here a little bit deeper here now, I want to sell the high of this trading range. But by the time we get back up to these highs, this is going to be a pretty darn bull market, right? By the time we go back to the highs here, this is going to pick up momentum. The buyers will start getting more aggressive, right? It's going to feel like a bull market, and it will be very much bullish by the time it gets back to the high of that range. So when I see this situation, the overall trend is bearish, but we've got this short-term momentum, and I know it's just going to be difficult for me to find an easy way to sell back down, because as soon as it goes lower, what will probably happen is you're going to see buyers buying it right up again. So it'll be difficult to get a good entry short, even though the market is overall bearish. And this is one of the big stumbling blocks that I had when I was a new trader, and that is the long-term trend could be one direction, but the short-term trend is the opposite direction, and that makes for a very grindy, a very challenging environment. So I got to make sure I understand, yes, I do want to sell, but I don't want to do it at the expense of my capital because I'm trying to sell when the market short-term is bullish. So when I see situations like this, I know it's time to focus on a specific version, right, of what I call the two-try rule. And I call it the nested two-try rule. And basically what that means is I need to wait for the buyers to do their job. Here's a great example of it right here. We saw a strong move off of that low. It's such a strong move that, like I mentioned, anytime, if you were to take just a simple failure pattern, right? One try, two try, failure. If you try selling that, there are buyers waiting down here, right? And those buyers are going to take it higher. You can see it happen right here, right? That strong move up, it was so strong that buyers were waiting, right? They were waiting right below that swing, right there. See it? Buyers tried to come in, and they almost spoiled the fun there for those sellers. Almost, right? So I want to anticipate that, right? We're anticipating that. So what I'm going to do is I'm going to wait for this market to go higher here now, and then those buyers, they want to run this thing higher. I'm going to let them try twice to do that. One try, two try, and then back down from there. Now, I have a couple different rules that I use along with this, and we'll go over that tomorrow morning in our trade room. But just rest assured, though, this is the most challenging type of range environment. It's a wide range. When we get back to these highs, yes, I do want to sell above those highs, but I'm going to have to respect that momentum as we go higher. So a couple things I'm looking for here as we go higher here. As we go higher, I'm expecting this market to have no problem going back up into this 27.5 area. Then from there, it's really one of maybe three scenarios. One scenario would be we get that nested two try, right? That one try, that two try, and sell back down, right? One try, two try, sell back down, just like we saw right earlier on in this morning's session. That's one opportunity there for that nested two try. One try, two try, sell it back down in. Another thing you want to think about too would be, right, and this is, we saw this earlier, right? You get these kind of V bottoms, right, off of this range sometimes. Strong move up, strong move down. If we just see it collapse back down in, then I've got to really wait patient and try to sell as high as I can, right? We'll use what we call a trap setup once we get, again, that's if we just turn and roll right back into that range, right? So that's what we'll do if it just turns, right? So two real easy ones. One is a nested two try. Two is the if it just nose dives back down in, I'm going to look for those traps and just try my best to sell, right, up around the high of that trading range, right? I always want to sell towards those highs. A third scenario here on the S&P would be a possible reversal. Now, what would a reversal look like? A reversal to me, we talked about the 1, 2, 3 reversal earlier on, right? What does the reversal look like? 1, 2, 3. But in my book, whenever we have a trading range like that, I'm expecting this thing to have no difficulty going back up to that range. Show me that 1, 2, 3 outside that range, and now I'll start taking that more seriously here. So if we do see this thing rally higher, and we can hold that pullback and jump off of the highs, that's the key, right? Just like we saw back here, they get a strong move up, they couldn't go. If we can get that tomorrow morning, then we know we get a new breakout. I'm going to mark up that new channel, find that new channel, find that sweet spot, right? Find that sweet spot. And again, we'll look for, in this case, we'll look for seller failures, two try failures. We'll look for bear traps, pullbacks, all kinds of specific entry patterns that, again, you're going to learn a whole lot more about those entry patterns, the time frames I use, the patterns I love to trade every day in our trade room by grabbing that free course in the upper right-hand corner. Grab that information icon right in the upper right-hand corner. Don't forget, it's also linked up below the video if you're here on the blog. Don't forget, stay away from that middle, buy low, sell high. Again, it's going to be those nested two tries, right? What about buying off the low? Can we buy off the low? Absolutely, you can buy off the low on this, but because it's a bear market overall, you want to use that same basic principle, right? You go down, one try, two try, back up, right? Down, one try, two try, back up. Use that nested two try. That way you're not falling victim to a wide range, right? It's those wide ranges that allow momentum to build, right? Unlike, for example, the Nasdaq, right? So here's the Nasdaq now. The Nasdaq is a great kind of comparison here to the S&P. The Nasdaq isn't nearly as difficult as the S&P because you'll notice the Nasdaq also has a trading range, but it's not as wide, right? That momentum isn't going to be able to build steam as easily as it was on the S&P. So we don't need to worry as much about that on the Nasdaq. Nasdaq is definitely bearish. It's got its own trading range, and you got this beautiful pendulum swing right on the chart right now. That pendulum swing above the range and the pendulum swing below that range, creating support and resistance levels overhead. The bears obviously have momentum right now. That's not the concern here, at least for now, right? And that tells me to look for selling opportunities up at resistance levels overhead. And with this being a range-bound market, I know the most reliable selling opportunities are going to be up around the range expansion levels. If I take the size of this range, copy and paste it up, that creates resistance. Copy and paste it down, that creates support. You can already see they've used this support and resistance on a few occasions here since the end of the week last week. At this point, the range is not very wide. So at this point now, we're looking for that one try, looking for two tries, and back down in. You can see another variation of that nested two try. Strong move up, 1, 2, back down again. Very good example of that. But again, with this really narrow range right now. You're probably not going to need that nested 2-try. You'll notice there weren't that many buyers waiting below that 2-try failure. That's exactly what I'm looking for here tomorrow. I want to see us go up. That'll be 1 try, pull back to that moving average. Right, pull back to that moving average. Let them try twice off the moving average, much like we saw back here. Now we know where their stops are, right, and we can sell into those stops. If we get lucky, we can then use the hidden channel pullback pattern, right? Hidden channel pullback pattern obviously is a relatively complicated pattern. You've got to find those 2 lows, right? I'm going low to low. That helps me find that channel high. That, of course, we call it the hidden channel pullback pattern or just the continuation pullback pattern, right, as we go lower. Also, don't forget, oftentimes we forget about these 2-legged pullback patterns, right? Trend line coming in, 1 try, 2 try. That can also qualify as a 1 try, 2 try failure as well. We're selling off the underbelly of that trend line, but you can also, of course, 1 try, 2 try, right, sell into that buyer failure as well, because we know that's where those stops will be, right, for those buyers. Now, what about if price goes lower here? Can we buy off the low? We can as we go lower. Just remember, though, it's a bear market, so you want to look for that nested 2-try, 1, 2. Let those bears try twice down here, and then we can buy into those stops, which would be sitting right above those swing highs. So that'll be the plan if we want to buy off of those lows. How does the market reverse? What does reversal look like? Or should I say, what does a breakout look like? A breakout basically at this point needs to look like this. It's going to be a real strong move up. It's going to get that pullback to the moving average, and then we need to see a strong move through. That's what we didn't get earlier on here, right, in the session today. If we can get that strong move through, right, strength, pull back to the moving average, that qualifies the 1, 2, 3 reversal and the 1, 2, 3 breakout. Mark up that high, mark up that new channel. Yep. And then we'll buy that pullback again off that sweet spot. On the pullback, we're looking for seller failures. I'm looking for pullback patterns, 2-legged pullbacks, 2-try failures, lots of different entry patterns that we can use. And again, as I've mentioned a few times, I can't go over all the details in this nightly newsletter because we're already about 32 minutes into the video right now. But if you want to get a deeper dive into all the entry patterns that I use in our trade room, make sure you grab that information icon in the upper right-hand corner, or go in the description of the YouTube video, or there's a big red button right below the video tonight on the blog, and you can go out and grab it. No surprise here to see the market rallying higher right now. This is exactly what we expect. Will they reverse the trend, or will they give us a beautiful sell back down to retest that low? Only time will tell here on the Nasdaq. Let's keep going. We got 2 more charts to cover tonight. We get the gold and we have the euro. Gold is in a trading range, right? Gold is range bound. Bear bias, measured move, and a round number on the chart this evening, right? We're bearish. Momentum is bearish right now here on the gold. It's pretty easy to see, right, that move lower here on gold. That's quite obvious there. So bears have the wind at their back. And when you combine that with a trading range, right, that bear market into a trading range, the plan is pretty simple. Sell above the high of that range using that 2-try failure pattern. And of course, I've got my eyes on this whole confluence area up here. Great looking area around that 1208 area. A couple things here because of it. One is a measured move. So we got 1 leg, 2 leg. That puts us for a measured pullback at 1208. At the same time, I can take this trading range. I can copy and paste it down to create support. I can copy and paste it up to create resistance, 1207.4. And then just to add one more thing on top of it, the move below the range, right? The move above the range, we call this the pendulum swing. And you'll see a lot of examples of these pendulum swings inside that free trading class. The pendulum swing now tells me we were balanced here. We swing down. We'll probably swing back up. And that also puts me right around that 1208 area. So we get a lot of confluence here around 1208. We are sitting right around that big round number. So we do assume that round number will continue to be the magnet here or the objective for those those bears. So we want to sell high. We want to buy low. The overall market is bearish, so selling high, of course, is definitely preferred here. But I've definitely got a good plan here for us if we want to buy low as well. How do we sell high here? Well, first of all, I'd like to see these buyers try to break this market higher. Once they try to break that market higher, now we know they're going to want to buy that pullback. Once they try to buy that pullback, now we've got them right where we want them. Now those buyers, it's do or die at this point. If they can't keep going, we're going to sell right into their stops below that low. Stops get run, buyers become sellers. Then oftentimes it does shoot lower pretty aggressively. I'm not going to chase after it here. I'm going to look for that new hidden channel. You got it. And then we'll sell that sweet spot right off of that high, right? So it's a two-try failure into a hidden channel pullback pattern. Should be a relatively easy pattern to get our hands on. We also may get that, right, that two-try, that two-legged pullback. 1, 2, then use that trend line, right, as resistance as well. This could also, by the way, be a one-try, two-try failure. I'm just going to illustrate it, though, off the underbelly of that trend line, so watch that as well. And then what if it keeps going sideways here? What if it just keeps grinding sideways here? If it keeps going sideways, don't do anything with it. Just wait patiently for it. We'll get it eventually. One try, two try, sell back down, right? That's the plan, right? One try, two try. Let those buyers try once. Let them try twice, and we'll sell it back down again once we see that second try start to fail, right? We'll just short it back into that range tomorrow. What if price goes lower? Right? Can I buy this market? You can. Just wear your helmet and wait for that two-try nested, right? So we go lower. It's 1. It's 2. Wait for that two-try nested pattern, right? And again, don't forget, I have a very specific set of rules that I follow for that type of pattern. We're going to go over those rules tomorrow morning in our trade room using our checklist. I have a checklist that I use on every single trade that we take. I give that checklist to all my clients, and we'll go over that tomorrow morning. So make sure if you're joining me tomorrow morning in the trade room, make sure you're there on time because we'll go over those nested two-try failure patterns tomorrow. I cover a lot of the basics of that pattern inside of that free trading course. So grab that below the video. And of course, in the upper right-hand corner, right, grab the information icon there. How do we turn bullish? What's a bull market look like here in the gold right now? Yeah, bull market's going to go pretty strong, right? Strong move up, pull back to the moving average. You got it. Strong move through. Easy, easy, right? Mark up that high, mark up that new channel. And now we know where our hidden channel low is, and now we know where we want to buy here. Once we get the pullback, this pullback could easily be a 1-2 failure. It could easily be a trap, right, into a two-try failure, right? Maybe it's a two-legged pullback. So there's a lot of different ways, lots of specific entry patterns I'll look for once we get that reversal. And again, tomorrow morning, we'll go over it all, right? We'll go over all of it together tomorrow morning, or you can get a much deeper dive into all these entry patterns by grabbing that free course in the upper right-hand corner, right, or linked up below the video here tonight on our blog. Pretty easy here on gold. Again, tomorrow, expecting to see some fireworks early on the GC just because of all the CPI, all the inflation numbers, and of course with the Brexit stuff going back and forth. So be very careful if it sits sideways here. Wait 1, 2, and then back down, or wait 1, nested 2, and then back up from there. We'll talk more about that tomorrow morning in our trade room. And then last but not least here, how about some euro here tonight? Boy, that euro just pretty much did exactly what I was kind of thinking it was going to do here as he opened up in Asia. Euro was bearish with a flag pattern, right, a support trend line and a gap on the chart this evening. The bears did have control. They just lost that momentum right now. So, of course, with that strength, you can see now with that 1, 2, 3, now this pattern is basically blown out of the water. What I was going to say here was it looks like these sellers are losing their grip. I was going to say look for a buy down inside that battle zone, even though the market's bearish, right? That would be considered one of those situations where we're boxed in. Let's say, for example, we didn't know about that green candle. This would be a good example where we had that strong move down. The bears try once, the bears try twice. It may not be a bull market yet, but with the one try, two try, this is kind of that same nested two try I was talking about earlier, right? Alluding to there. My whole gut was telling me though, This rising support trend line, though, would make it almost impossible for sellers to try to sell that. So I was expecting this to be a bull market tomorrow morning. It's already giving it to us already now with that 1, 2, 3 reversal. So let's update this chart. Let's mark up. I'm going to mark up these highs right here. I'm going to bring that down for my channel. And then I'm going to do this now. Let's do this. Let's go like that, back in. See if we can't figure this thing out here real quick. Perfect. Get that on. Get that up. Okay, so that becomes our new battle zone. Markets are always changing, right? So got to change with it. That becomes our new battle zone right there. Now all we need to do is buy low. Got a big juicy gap waiting here on the euro. That gap around 13,650 or so, just begging to be filled here. Strong move up. There's a gap on the chart here. They're going to want to pull back to fill that gap. The market's bullish. We're definitely not bearish anymore. That should be changed down from bear to the bull. It's no longer a bear flag. It's now a bull channel, right? I'm trying to find some sort of like hidden level of support here. But in all honesty, though, I want to see us pull back, get below the moving average, and I want to see a 1 try, 2 try into support. Let those bears try once. Let them try twice. I'm looking to buy off of that low. This is my plan before we turn bullish, but now it's bullish, so the element of surprise is a little bit behind us now. I think everybody should see we're bullish at this point now. So now I want to get back, pull back. Let's get to a level of support here right now, and that will be the ideal scenario here for the euro tomorrow. 1 try, 2 try, and we're buying into those failures. What if we go sideways here? That's definitely a possibility with this Brexit talk going on right now, right? So what if we go sideways? If we go sideways, it's then a 1 try, 2 try. Get that 2 try breakout failure. We'll have to buy off of that low. Let those sellers try once. Let them try twice. And, of course, we get those bulls, right, coming roaring back in on that. Another scenario to keep in mind would be a spike in channel. Right? If we do keep going higher here, if we keep grinding higher on this, if we keep grinding higher in the overnight, keep your eyes on the base of that channel and looking to buy that deep pullback with a spike in channel with that deep pullback. That'll be a beautiful trade here if we can get this to keep going higher here. So really there are basically 3 basic scenarios right now. One would be a deep pullback with a 2 try failure, right, into a pullback and then higher, right? Deep pullback, 1, 2, failure, right, into a hidden channel pullback pattern. That should be relatively easy. Hopefully we get it. Or maybe we go sideways up here inside a range. If we get a range with a bull bias, 2 try failure, 1 try, 2 try, back up. Or maybe we get lucky and we get a nice spike in channel here. If we keep kind of rolling higher here right now, right, and we get lucky, nice spike in channel. If we do get a spike in channel, right, find that base of that channel, wait for that pullback. Beautiful traps on these. These are always some of my favorite trades on these spike and channel patterns. That would really be a beauty here for tomorrow. Again, it's a little bit up in the air right now with the Brexit talks tomorrow morning. I think I saw 1400 gamut tomorrow, right? So 2 o'clock. So it'll be middle to late morning here in the U.S. tomorrow. So just keep your eyes open on the euro. Don't force it tomorrow if things aren't looking very peppy. And as always, we'll be in our trade room tomorrow morning, 8 o'clock Eastern time, and we're going to execute this strategy no matter what's moving tomorrow, right? We'll definitely make the most of it. Like I said earlier, we open up our trade room every morning at 8 o'clock Eastern time. We've outlined the plan. Now my job is tomorrow to go in and trade that plan with all of our advanced members. You can learn more about our advanced classes here at schooloftrade.com. I'll put all the links in the description of the video. You get a great free trial. You can find that right on the homepage. And don't forget, if you ever have any questions, you can pick up the phone and call anytime you want. You can use live support. It's always there, always on for you guys. I've got a great free trial. Give it a try, right? And if not, we'll see you guys tomorrow morning, 8 o'clock Eastern time. If I don't see you guys tomorrow morning in the trade room, I look forward to seeing you guys back here, same time, same place, tomorrow night on our next edition of our nightly newsletter. As always, my name is Joseph. Thank you so much for tuning in. Thanks for sharing this with a friend. Thanks for giving me a thumbs up if you like the content. And I'll see you guys same time, same place tomorrow night. Adios, amigos. Bye-bye for now.